Hello and welcome back. In this update video, we dive into the Reno-Sparks real estate market and find out why Nevada is one of only 2 states with a very mysterious trend. We'll explore what's driving prices, uncover sales trends, and so much more. So stick around to find out the secrets behind our unique real estate market. Let's go.
Assist you sell way smarter.
Now, the first thing we always dive into is interest rates. Why? Because it has the biggest impact on real estate and more specifically prices and inventory. And I'll explain more of that in just a minute. Now, as you can see from the chart here on the screen on the left side are interest rates. They go from 2 up to 8%. And along the bottom are the years. We went back roughly 20 years. And as you can see, interest rates have gone up significantly. I'm sure most of you are aware of that. But the good news is they've actually fallen a bit. We're sitting right at 7%. Back in the peak, about a year ago or so, we were looking at just right at 8%. So we are seeing interest rates ease a bit, which is a very good sign. Now let's take a look at, and to give you a visual on how interest rates affect home sales, this is a chart I found, and I'll explain it. There's a blue line and a red line. The blue line is existing home sales, and on the left side is the blue line data. And basically sales go from 6.0 to 4. So this is 6 million, 5.5 million, 5 million, and so on the right side. Now on the left side is for the red line, which is interest rates. And they go from 3% all the way up to see down here at 8%. Now, as you can see, as interest rates rise, we started out back in, February, March of 2022. You can see interest rates were roughly 3%, and we were on pace for roughly 6 million sales. Now, as interest rates started to rise, the red line, you started to see sales fall. And you can see they basically ran parallel to one another. So the higher interest rates go, the lower sales go. Now let's take a look at that mysterious trend, and one of only 2 states with that trend, and only 2 states that have less inventory, meaning less homes for sale this time of the year, April 2024, than they did last year, April of 2023. So we're actually seeing a little bit less homes for sale. Now, Nevada is 25% less inventory than we had at this time last year. Now, how has that affected median home price? Now, before I dive into the median home price, let's talk about these charts real quick. On the left side, you see price. On the bottom, you see dates. Now, the majority of these charts go back 10 years, in this case, back to 2014. Now, up here, you see May 2024. I know this is the June 2024 market update, but as I film this, it's early June, and we only have stats through the end of May. And then when you see prior period, that means the previous month. In this case, April of 2024. And when you see the same period prior year, well, of course, that was May of 2023. So we are sitting right at $585,000 as a median home price. Now, Reno may be slightly higher, Sparks may be a little bit less, but overall, you're looking at $585,000. Now, the good news is you're starting to see a trend line emerge, which is basically we're right around this 535, 540 to about 585 as we're seeing now. I do expect this trend to continue where we might see slightly higher prices, slightly lower prices, but I don't expect to see prices continue to rise at the level or at the pace that they have over the last few years. Now let's look at new listings on the market. Now this is a number of homes that came on the market just for the month of May. And this gives you sort of a indication of how many people are looking to sell and putting their homes on the market. And as you can see, this chart goes all the way back again, once again, 10 years on the data on the bottom. And on the left side is the total number of sales. Right now, we're sitting at 631 active listings or new listings that came on the market in May, which is up good 16.4% from last month, but only up slightly at 2.4% from the same period last year. Now that's new listings. Now let's look at new listings by price. So this tells you who listed their home, but also the price range they were in. And as you can see along the bottom here is the actual price range, and these bar charts on the left is the total number of new listings. And you can see the prices are broken down from 2 to 3, 3 to 4, 4 to 5, etc. And they go all the way up to over $1.5 million. The majority of new listings coming on the market are between $400,000 and about $750,000. Now let's talk about active, and you're probably saying, what's the difference between active and new? New just means they came on the market. Active means they're still in the market today. These are homes you could go out and look at and buy. Or if you're thinking of selling your homes, this is going to be your direct competition, the ones that are on the market that you'll be competing against. Right now, we're at 707 total active listings on the market, which is up 9.7% from last month, or I should say in April, but down 15.6% from the same time last year. Now remember those active listings, we went over here to this, excuse me, I meant to go to this chart, and as you can see, we're down 25%. So that holds true if you look at actives down 15% just in our region alone. Now if you go actives by price range, this is where things get a little bit more interesting, right? You can see $1.5 million, we're starting to see inventory build, even $1 million to $1.5 million. 750 to 900,000, you're starting to see inventory build. Now, where this gets interesting is when you start looking at closed sales. And these are the number of homes that sold. Closed just means they sold in the month of May. We had 464 total sales, which is up nearly 9% from April, which again, this time of year isn't all that unique because as the spring market picks up, we generally get more sales, more people are out there buying and potentially selling. Up just slightly over 1% from last year at 459. Now, if you look at closed by price, this is where it gets interesting, as I mentioned. If you look at the number of closings, $1.5 million, very few. 1 to 1.5 million, again, not a whole lot. Even 750 to $1 million. And if you go 600 to 749 here, you start to see that's where sales start to fall off. Now, the reason that's interesting is if you go over, let me drop this back out, active by price. You can see we've got a ton of actives starting to form and build up in the upper price ranges, but we're seeing very few sales, right? So if I go active, lots of inventory, closed, less and less sales. Now, what happens normally is if you get a build of inventory and you see sales start to fall, that starts to put pressure on prices. And the opposite is true. If you start to see very few homes on the market, massive demand, that tends to drive prices higher. Now, this is very interesting to me in that I wanted to break down not month by month, but let's look at year. Now, this is year over year for the last 10 years. So this is through the first 5 months of the year, going all the way back to 2014. At this time of the year in 2014, we'd had roughly 2,500 sales. You can see that here. Then it went up to roughly almost 2,700. Peaked out at just shy of 2,800 in 2017 before we started to see a fall into 2019. Now, if you recall what happened in 2018 and 19, when we look at total number of sales, let's go take a quick peek over here what was going on in 2018. What happened? Interest rates that had been heading downward for a number of years actually spiked up to about 5%. I say spiked because 5% would be awesome right now, but they went up significantly, and as they went up, you can see overall sales fell. And then we started to see a bit of a rebound through COVID and all of that when interest rates dropped significantly, and then we saw them fall off a cliff. So sales dropped significantly down to roughly 1,900 in 2023, and we're just slightly above that. We're 1.6% above that at 1,910 for 2024. Now, this is something I like to keep an eye on. It's a bit of a canary in the coal mine to find out what our market is up to, and that is unsold listings. So these are listings that are, withdrawn, canceled, expired, meaning they went on the market and for one reason or another they never sold. Now, generally these are a fairly low number, which is expected because our market is moving and we have low inventory, but we're starting to see a bit of an uptick in unsold homes. So up 64.6% from April, where we only had 48. Now we're at just shy of 80. It's up 43%, almost 44% from last year where we had 55. So to sum it all up, I think there's a number of things to keep in mind. Number one, while many markets around the country are starting to show signs of softening, you're starting to see inventory build and prices soften, it's not happening so much in the Reno-Sparks area. However, it is happening depending on the price range you're in. So if you're thinking about selling your home, it's a great time to sell while the market is still extremely tight. Low inventory means that you could probably command a solid price. If you're thinking of selling your home, you owe it to yourself to check out Assist to Sell. We'll sell your home for only $49.95. When you compare that to the median home price here in Reno of almost $585,000, you're talking in excess of $30,000 if you agreed to pay 6%. Now, even 5% would put you at well over $25,000. It's a massive amount of money, and well, quite frankly, it's not necessary given all the charts and trends and stats that I just showed you. Your home will sell. The question is, what do you want to pay to get the job done? Assist to Sell does everything start to finish, from advertising your property aggressively, showing your house, preparing it for sale. We have the experience. We've been here since 1987, and I know we can do an amazing job for you. So don't hesitate. Reach out if you're interested. We'll see you next time right here on the Reno-Sparks Real Estate Market Update. Bye-bye, everyone.
Assist to Sell, way smarter.